Welcome to Market Brief After Hours. It has been an absolutely historic day on Wall Street, with major indexes hitting milestones that seemed out of reach just a few months ago. We have a lot of ground to cover, from record-breaking stock runs and surprising inflation data to major shifts in currency and commodity markets. Let's start with the big headline. The S&P 500 did something today it has never done before. Can you walk us through those numbers?
It was a milestone session indeed. The S&P 500 rose 0.65% to cross the historic 7,800 mark for the first time ever during intraday trading, ultimately setting a new closing record at 77.99. The Nasdaq Composite also had a fantastic session, gaining 0.81% to finish at 26,803, largely propelled by heavyweight tech names like Meta Platforms, Micron Technology, and Netflix. Even the Dow Jones Industrial Average managed to join the positive territory, inching up 0.13%, or about 70 points, to close at 53,840.
That is an impressive showing across the board. What was the main catalyst driving this optimism?
It really came down to a double dose of good news: cooler than expected inflation data, and a significant slide in oil prices. On the inflation front, Wall Street digested the July Producer Price Index, or PPI, which measures what wholesalers pay for raw goods and materials. Headline PPI came in completely flat for the month, which was a pleasant surprise compared to the 0.2% increase economists had forecast. If you strip out volatile food and energy costs, core PPI rose just 0.2%. also coming in slightly below the 0.3% estimate.
And this comes right on the heels of the Consumer Price Index data we saw yesterday, correct?
Exactly. Yesterday's CPI rose 0.1% month over month, which perfectly matched expectations. Taken together, these back-to-back inflation reports suggest that price pressures are moderating. This has given traders a lot of comfort, and we saw them immediately scale back their expectations for a potential interest rate hike in September. Treasury yields reacted immediately to this shift. The yield on the 10-year U.S. Treasury note fell more than 4 basis points to 4.645%, while the policy-sensitive 2-year yield dropped over 5 basis points to 4.145%. The longer-dated 30-year bond yield also slipped to 5.214%.
That is a noticeable move in the bond market, but I understand there is still some caution in the air regarding how the Federal Reserve will view all of this, especially with the transition in leadership.
Absolutely. Market participants are highly focused on how the Fed, under its new chair Kevin Warsh, will interpret these latest figures. While the incremental moderation in CPI and PPI is undeniably constructive, the underlying policy direction remains a bit of an uncertainty that the market is still actively digesting. At the same time, we got some fresh labor market data today. Initial jobless claims rose by 9,000 to 209,000 for the first week of August, which was slightly above the market estimate of 202,000. It is another small sign of cooling, though continuing claims actually declined by 22,000 to 1,777,000. Now, you also mentioned that falling oil prices played a major role in buoying stocks today. What is happening in the energy markets? We have been tracking the ongoing U.S.-Iran conflict, so a drop in oil prices might seem counterintuitive to some.
It does seem surprising on the surface, but the big mover here was some commentary from U.S. Energy Secretary Chris Wright. He stated that crude exports through the critical Strait of Hormuz have actually neared a 7-day average of 9 million barrels per day, which is higher than many independent analysts had estimated. That eased immediate supply fears. As a result, Brent crude futures fell more than 2% to close at $87.07 per barrel, while West Texas Intermediate slid 2.4% to settle at $81.25 per barrel. Meanwhile, natural gas didn't escape the downward pressure either. NYMEX natural gas futures fell 2.2% to $2.742 per million British thermal units after the government reported a larger-than-expected weekly injection of 36 billion cubic feet into underground storage, raising the national surplus.
Fascinating dynamics. We are going to take a very quick break, but when we return, we will shift our focus globally to see how Europe and Asia reacted, dive into the latest Forex technicals, and highlight the individual stock movers of the day. Stay with us. Welcome back to Market Brief After Hours. Let's expand our view beyond the U.S. and look at how international markets fared today. Let's start with Europe. How did they close?
European markets actually closed slightly weaker, showing some caution. The ongoing conflict between the U.S. and Iran and the uncertainty surrounding the reopening of the Strait of Hormuz kept traders on edge.
However, the drop in oil prices and the cooler U.S. inflation data did help limit the downside. The Pan-European Stock 600 ended virtually flat, down just 0.04%. The UK's FTSE 100 dropped 0.56%, while Germany's DAX and France's CAC 40 slid 0.12% and 0.28%, respectively. Switzerland's SMI was a rare bright spot, closing up 0.18%.
And did we get any significant economic data out of Europe today?
Yes, we got several key updates. In the UK, second quarter GDP growth eased to 0.4% quarter over quarter, down from 0.6% in the first quarter, though this did match expectations. On an annual basis, UK GDP advanced 1.2%, slightly beating the 1.1% forecast. Over in the Eurozone, industrial production was completely flat in June, which was actually better than the 0.1% decrease the market expected. However, inflation remains a sticky issue in Spain, where consumer price inflation accelerated to 3.6% in July, up from 3.2% in June. On the flip side, Switzerland extended its three-year deflationary streak, with producer and import prices dropping 2.1% year-over-year in July.
Quite a mixed bag for Europe. What about Asia? I hear there was some explosive movement in certain markets there.
Absolutely, especially in South Korea. The KOSPI index jumped a massive 3.56% to close at 6,813, driven by a surge in large-cap tech names. To put this in perspective, the index is up nearly 22% since its recent bottom on July 30th. It launched itself back into bull market territory in just 10 trading sessions. Japan's Nikkei 225 also had a strong day, gaining 1.16% to close at 68,309, supported by exporters and tech. This happened as Japan's domestic producer prices rose 7.2% year-on-year in July, slightly below expectations of 7.4%.
And how did other Asian and Pacific indexes perform?
It was more subdued elsewhere. Hong Kong's Hang Seng dipped 0.17%, and mainland China's Shanghai Composite lost 0.5%. Down under, Australia's S&P ASX 200 ended 0.2% lower, while New Zealand stocks bucked the trend, rising 0.6% to close at 13,825. In India, the Nifty fell 0.34% to 24,353, and the Sensex declined 0.13% to close at 77,861.
Let's pivot to the foreign exchange and commodities markets, where we saw some very interesting technical setups today. Let's start with the euro against the US dollar.
The Euro-USD pair consolidated today, closing virtually flat at 1.1529. It traded in a tight range as buyers paused after the recent sharp rally from late July. Technically, the price is sitting comfortably above its 50-day simple moving average of 1.1465, but it remains capped below its 100-day average of 1.1567 and its 200-day average of 1.1628. If it can hold above the immediate support level of 1.1512, the bullish bias remains intact, but a daily close above the session high of 1.1546 is needed to really resume the rally.
And how is the British pound holding up?
The GBP-USD pair also stalled, closing slightly lower by 0.06% at 1.3487. However, the medium-term structure looks quite bullish. The price is trading decisively above its 50-day simple moving average of 1.3370, as well as a cluster of its 100-day average at 1.3411 and 200-day average at 1.3410. Momentum seems to be pausing near the psychological 1.3500 level. If it holds above support at 1.3474, we could see another push higher, but a break below that could trigger a pullback toward those clustered moving averages.
What about the New Zealand dollar?
The NZD-USD pair experienced a corrective pullback, closing down 0.13% at 0.5851. It faced a rejection near the 0.5900 mark, but we saw buyers step in near its key moving averages. The pair is still holding above its 50-day average of 0.5786, its 100-day average of 0.5826, and its 200-day average of 0.5830. As long as it stays above 0.5822, the broader recovery trend remains constructive.
Now, turning to metals, we saw some pretty dramatic reversals today, particularly in gold. What happened there?
Gold suffered a sharp rejection, falling 1.31% to close at $4,350. Early in the session, it attempted to push higher, hitting a high of $4,450, but aggressive selling pressure forced it back down. This move has pushed gold back below its 100-day simple moving average of $4,392, and the 200-day average at $4,487 continues to act as a heavy ceiling overhead. However, it is still well above its 50-day average of $4,157. Silver followed a similar path, retreating 1.35% to close at $64.42. It is currently trading above its 50-day average of $61.77, but remains well below its descending 100-day average of $68.83 and 200-day average of $70.69.
A very clear technical picture there. Let's wrap up today's show with some of the individual corporate stock stories that made waves. Who are the biggest market movers today?
We had some massive moves on corporate earnings and corporate actions. On the negative side, Tapestry, the parent company of Coach and Kate Spade, plummeted nearly 17% after posting underwhelming fourth-quarter results, earning $1.32 per share on $1.88 billion in revenue. JD.com's US-listed ADRs also took a hit, falling over 7% after the Chinese e-commerce giant reported its first quarterly revenue decline since its IPO back in 2014. And Cisco Systems fell more than 8% after its quarterly results failed to impress, dragging down other tech names like Cerebras, which plummeted nearly 12%.
But it wasn't all bad news. There were some spectacular gainers today as well.
Absolutely. Workday shares skyrocketed nearly 18%, marking its best trading day since 2016, following reports that private equity giant Silver Lake is in talks to acquire the software maker. Reddit shares also jumped 11% in extended trading on the news that it will be added to the S&P 500 index on August 18th, replacing Avalon Bay Communities. And finally, Netflix surged more than 5% after Bill Ackman's Pershing Square disclosed a brand new stake in the streaming giant.
What an eventful day across the global financial landscape. That is all for today's edition. If you found this useful, please follow Market Brief After Hours. We will see you next time.